You're watching Masters in Trading Live with Jonathan Rose.
Good morning, guys. Hello, everybody. My name is Jonathan Rose, and welcome to Masters in Trading Live. At Masters in Trading Live, I get on here every day the market's open, share some thoughts, go over the market, and once in a while, we'll even share our trade of the day. We are live on YouTube. Got the chat filled up. Thanks a lot for you guys joining nice and early. A whole bunch of good mornings in the chat. What are we going to cover today? Well, we got 4 topics like we normally do. We're going to go over bonds. For whatever reason, bond volatility is getting smushed, crushed. Why? We're going to go over it. I want to show you exactly what I mean because since the election, market's been strong, but bond vol, which is still a major question for the economy, for inflation, volatility is coming out of bonds so strong. We had some really good feedback and back and forth in our Discord about winners, about losers. I want to go over some of our members' comments. Trading is difficult. It's not all going to be roses and unicorns, but if you put yourself on a path to education, you can move the edge to your favor. And then finally, we're going to talk a little bit about extended hours trading. So without further ado, let's go over to the screen. Let's see what we got. All right, I'm headed over to the screen. My apologies for wearing these headphones around my around my neck. Probably don't need to be wearing those for MIT Live. Okay, let's talk about bonds. Hey, Rick, good morning, buddy. Bonds. I traded bonds professionally from 2002 till 2010. I am extremely comfortable when it comes to trading bonds. Not as comfortable when it comes to writing bonds, but trading bonds, yes, that is where I'm comfortable. So what I'm going to show you right here is the blue line is going to be the ZB. That is 20 years of bond duration. The ZF is going to be the 5-year future. It's actually 4 years of duration. Okay, think of it like a 1-year bond, a 30-year bond, a 4-year bond, a 20-year bond. ZN is the 10-year. The ZN is actually 7 years of duration. So if you loaned money to the U.S. government for 4 years, or if you loan money to the U.S. government for 20 years, for 20 years, when things are good, you're going to get a better coupon. If you loan the government for 20 years, if you give them money for that long, they should give you more money. If you only loan them money for 4 years, they're probably not going to give you as much, but right now, it's pretty much the same. Whether you're going to loan the U.S. government money for 4 years, 7 years, or 20 years. That's what I am charting all right here. And every single month, we start again. Start fresh. Start fresh every single month. This is volatility. Volatility. And it's a real-time measure of volatility. Last month in October, volatility was rising. Volatility was rising. Why? Because of the election. Good answer. Way to go. Well, look at November. Since the start of November, vol has gotten decimated. Like really, did somebody throw their own glockenspiel on? That was awesome. I just heard a glockenspiel. Okay, so, sorry about that. Is that really just coming on YouTube right now? I hope not. Nevertheless, I'm going to keep on going. So this is the overall market, right? We were just talking about it. This is volatility. So what happens when bond vol gets crushed? Well, in order to look at when bond vol gets crushed, can we just look here? Can we just look here in August? In August, bond volatility got annihilated. Very, very similar to November. When else has that happened? Oh, let's go back to May. In May, bond volatility got smoked. Okay, ignore, these are just bad prints, but notice how bond volatility got smoked. Again, that's what's happening right now. So what can we do? Well, what we need to do is why don't we look and see what happened during these times of bond volatility destruction. May, mid-May, and August. Mid-May, is going to be right there, and August is going to be right there. So what are we doing? Like here and here. And these are the cues. I'm going to go back to that chart just to show you one more time that it happened in May and it happened in August. So we're going to go back to the chart right now. And again, this is May here. Notice that bond vol getting killed. And then August as well right here. Notice that bond vol getting killed, right? I know I wrote a lot on these charts, but it's pretty obvious, right? Same exact behavior going on right now. And if we look at the QQQs, we saw that behavior in May, we saw that behavior in August, and after that, the market is just super strong. So what does that mean for now? I think if bond vol continues to come in, the market is going to stay strong. I just do. Q's pulling back a little bit, but not very much. Watch that bond volatility. When volatility goes lower, markets go higher. Why? Because there's no risk. Risk is coming out of the market really hard. I've been talking about this a little bit, fast casual restaurants. I just got something real quick on this because Kava. Have you guys eaten at Kava yet? Kava is a $20 billion market cap. Kava is a $20 billion market cap. Chipotle is an $80 billion market cap. So right now, Kava is 20% the size. Sweetgreens really this thing needs to either come up higher or Kava is just too high. I don't understand how just one name in the fast casual space is just going to leave everybody else. This is nuts. Kava is out of control. $20 billion market cap. That's insane. Okay, I want to share this. Really, really great comments. I'm not doing this to call anybody out. If anything, guys, I just want this to be transparent because I'm on here every single day and we share a lot of winners, but it's not easy. Not everybody who joins just starts making money right away. Trading is difficult. Anything that you have to put time in to learn is difficult. So, got a really good comment yesterday. Guys, I'm losing money in this channel. Is anyone making money? And it's a fair question, especially these online companies. So many people get on here all the time and they only talk about their winners and they don't talk about their losers. So we had some feedback from other members and I just thought it would benefit everybody by just being transparent. So here we go. One member losing money. It happens. Fat Buddha, I've had good weeks and given back on others. In 3 months, I've had more winning weeks than losing. The last 2 weeks have been great for unusual options activity. I feel your pain. I've been up and down, currently down. But most of my losses have been because I've missed taking profits. I need to scale back on expectations. I'll work on smaller profits and put on hedges. Maybe learn how to set trailing stops. Also, fortunately or unfortunately, I have a job. I work. 3 days in the office. I'm learning. I've minimized some losses via gamma scalping. Okay? Education mitigates risk. Okay? Education, I'm not going to write this all out, mitigates risk. Another comment. I got in May of this year. Made some money initially. I decided to go into all access. I still work full time. Although I would have used the education here to make trades on my own that I probably wouldn't have made normally, and I haven't made trades that I would have made, which probably saved me money. I do not trade large amounts as I still consider myself in the learning process. I haven't really been used the website tools, and I'll eventually deep dive into them as well, including a minimal amount of trades, less than 10%, but primarily JR trades. I've covered my all access for the year, and on top of that, I'm up about 6,400. What I love about this is I only average exposing myself to a small amount on each trade. We share lots and lots of trades, and people are learning at the same time that they're risking money. So you don't need to trade big bucks. I don't like giving people advice, but if I were you, I'd stick with it at a low risk, comfortable pace, and I think you'll do well. Good luck. So in our community, it's not easy. We have people from all walks of life. We have people doing well. We have people struggling. If 10 people take the exact same trade every single time, you're going to get 10 different results. That's why anybody trading, anybody risking money, I strongly suggest you find a community of like-minded people that you can work with. Hopefully this helped you guys. Again, I'm just doing this to be transparent. One other comment, different topic. Extended hours trading. Extended hours trading. Extended hours trading, I think it's a no-brainer for people to use extended hours trading. And here's why. If a stock's at 10, okay, and if you're long the 12 calls and earnings have come out and the stock's up overnight, well, put a limit order. Limit order. Good till canceled. And you can work in order to sell the stock at, say, $15. If you sell the stock at $15, you make $3 on your call. The market might not trade 15 once it's open for the day. So it really makes sense for you to work good till cancel orders when the stock market is not open. Hopping on live. Any questions from the YouTube? I see you guys in there going back and forth. Wanted to go through some good, some bad, but hopefully you can see that we're just being transparent. We teach people how to be successful trading options. It's not easy. It takes time. That's why we want people to come in, paper trade, take it slow. After 2 or 3 months, I'll bet you'll get a lot more comfortable. For everybody in all access, we are getting towards the end of earnings season. I think this just might be our last trade of the earnings season, and it's a doozy. So you guys hang on. We'll be right back. Thank you everybody for watching.